Thank you for coming, everyone. Interrupting your lunch or afternoon tea to hear about Grove and Janus and the cool stuff they've just accomplished. I'm Grant from Etherealize. We're an Ethereum policy, marketing, business development, and tokenization wing for Ethereum, trying to bring Wall Street assets to the L1. So I'd like to start off by asking you guys about what you've accomplished. So the context, as I'm sure many of you are aware, is Janus, Grove, and Centrifuge have come together to put CLOs on chain. And Kevin, your company Grove was just announced like a week ago, I think. It came out of stealth. It was in development for years. Yes. Can you talk a little about Grove, what led you to create it, and why now was the right time to launch it?
Yeah, no, it was definitely a long journey, and I feel like we're just at the beginning. So I'm both optimistic, but also here to celebrate the part of the journey that we're in today. So Grove, it has been over 2 years in the making, and it was really the formalization and realization of Sky and Maker's RWA strategy, which the team at Steakhouse and ourselves at Grove, and together we've been kind of championing and pushing the industry along for many years. Grove was announced last week as the second star or sub-DAO part of the Sky and Maker ecosystem, and again, it's the embodiment of how can we take RWAs forward, how can we continue to diversify the balance sheet, but also introduce more institutions and players and products into the space that leverage traditional finance and the best of institutional DeFi. So we're really excited about that and have great partners here to kind of help shepherd that mission forward.
Great. And there are a lot of teams trying to build infrastructure between TradFi and DeFi. So why is Grove the right team to pull this off?
Look, it's a multidisciplinary problem that we're tackling, right? And what I like to describe it as, it takes a ton of coordination, it takes a lot of deep thinking and mission-oriented building. So the team at Grove and at Steakhouse at large comprises of the disciplines that are required both from a technical and product understanding, the strategic mindset that is required to navigate the very complex DeFi and crypto ecosystem and landscape, as well as the rigor and the credit underwriting and structured finance and traditional finance expertise that we want to bring into the space continually to up-level the industry forward and be able to build a bridge with institutional giants like Nick and Janus. And it's sort of the culmination of the people, but also kind of the current time, right, with the existing kind of change in the tone, both from the regulatory level to the platforms that we have available today to build on top of. It really is, I think, the perfect time to be announcing Grove and really scaling on-chain RWAs and institutional finance in the DeFi space.
Great. And now, Nick, at Janus, you guys started with T-bills, and now you're bringing CLOs on chain. How did you get buy-in inside Janus to partner with Centrifuge? And how has the experience been so far?
Yeah, well, the experience has been fantastic. I mean, this partnership and announcing, a $1 billion allocation to a CLO fund is a pretty amazing kind of validation of the strategy. But I think both Centrifuge and Grove, in their own kind of perspective or respective roles, is the same answer, which is that you get credibility and you get buy-in internally if you're working with very high quality partners, right? So for Centrifuge, as a sort of long-standing protocol focused on tokenization of real-world assets, understands the space deeply, technology that we can get comfortable with easily in terms of being the platform on which we're deploying. I mean, at the end of the day, what we're doing is just managing assets the same way that we always manage assets. And what we're afraid of is that some person somewhere has a bad experience with that product, not because of something that we've done, but somewhere along the chain, right? And so it's not enough to just say like we're going to manage treasuries well. I mean, to be honest, it's not that hard to manage treasuries well, right? Like the question is, okay, all the other steps that exist, is that kind of best in class? And with Centrifuge, it was probably a more painful process than they would have enjoyed, but they came through that process like extremely well in terms of the just the diligence and all of those factors. And then a huge amount of users, right? Steakhouse, Maker, Grove being, from our perspective, sort of users, right? That other partner, just having like very glowing reviews of the tech, like that's really what drives that decision and credibility.
Very cool. So, T-bills have had strong product market fit so far in crypto. They've been the main drivers of all the RWA tokenization we've seen so far. Can you talk about AAA CLOs? What are they? Will they take market cap from the T-bills? Or will they bring net new investment into RWAs?
Okay, yeah, I'll tell a little story because it actually answers the question of like why Grove and that this is kind of a unique moment, I think. So my kind of personal experience in CLOs probably 5 years ago was talking to one of our traders who said, hey, like I think maybe we could do a CLO ETF, and I was like, okay, what's a CLO? And that process was long and slow. Went out and talked to a lot of clients to get comfort that there was room for just traditional fund that hadn't been done before to deliver AAA CLOs. We spent a year and a half with the SEC getting them comfortable to finally launch the product. And by the end of that, was very, very confident that it could be a $20 billion product. That's 3 years ago when we launched it, and got a huge amount of pushback from people everywhere that like, this can't be, what's a CLO? Nobody's gonna buy CLOs. We went out to a massive number of investors, and in almost every conversation, this is the question we had to answer, right? Like, what is a CLO? Is it just CLOs 101? And in talking to Steakhouse and Grove, way ahead of almost any traditional investor that we were talking about from very early on when we were talking about JTRSY, of like actually understanding the asset class, like where it delivered value, et cetera. And I would say the simplest way to think about it is CLOs are kind of unparalleled, particularly AAA CLOs, in terms of delivering very consistent yield enhancement over equivalent fixed income assets, while controlling for kind of the two biggest risk factors that fixed income investors face, right, which is effectively duration and credit, right? So CLOs are AAA rated, right? That's better than the federal government at this point, right? Better than the US. And more importantly, with a 30-year track record, no AAA CLO has ever defaulted. So it is the highest, so that includes the great financial crisis, et cetera, right? So it's the most secure credit you can buy, really. And then you have this duration component that was extremely relevant, in the early days of bringing these products out with the interest rate environment, but is really relevant in kind of DeFi protocols where duration risk leads to price risk, right? And so you have this other component that you have to price in when you're thinking about using the asset, and that goes away here. So I think it's really very simple, which is it just optimizes these three things, right? Yield, duration, and credit in a way that's pretty unique. And then you need to have partners like Grove who understand that, and it was extremely nice. Again, our early conversations, they understood it as well or better than we did, which makes those conversations easier.
Great. And what is the duration of JAAA?
Well, again, these are, I mean, effectively it's zero. It's a half
it's zero.
month, right? I mean,
Okay.
yeah, I mean,
This is like short-term paper.
the only duration
Okay.
is just the reset. So they're floating rate off of SOFR now, right?
Yeah.
Formerly LIBOR. And you're picking up anywhere from 150 to 200 basis points on average over the last 30 years. And the only duration you face is just the reset period. So it's effectively
basically
zero.
a money market. That's cool. So I'm curious, do you guys have any plans or additional DeFi strategies or integrations with JAAA? So Biddle, for instance, has integrated with Athena, Frax, Morpho, Deribit. Seems like every day there's a new partnership they're announcing. What are your guys, either of you?
Yeah, I'll take that. I mean, getting the token on chain is just the very first step.
Yeah.
And at Grove, we have a view towards building a suite of products on top of the tokenized assets that enable new experiences for users that are in large demand today. For example, the experience of getting leverage on these types of assets to be able to, we don't expect to be the only holders. I mean, we're the current, single and largest holder up to the tune of $1 billion, but the intention is there will be more JAAA, tokenized JAAA users, of which we can provide services like repo like facilities, leverage, and the ability to basically create an RWA ecosystem with tokenized JAAA being just one of those. So again, Grove is launching a suite of products that will be building on top of these tokenized assets at its core.
Very cool. I have a friend, Gabe Shapiro. He's a crypto lawyer. He calls a lot of tokenized assets digital ornaments. Basically, crypto representations of securities, but the real source of truth is in some TradFi database. So, when are we going to have real securities on chain that are canonical, where the source of truth is the blockchain itself?
I mean, I think that time is coming quite rapidly. Again, back to the earlier question around why Centrifuge, one of the reasons that we partnered with them originally around JTRSY is that I think Centrifuge and Anemoy have done much more than anybody else in terms of tokenizing every step along the way where it's possible. There are still a lot of steps where it's not possible. I mean, you could, but you're just adding a layer. But I think we're getting very, very close to the beginning of like legitimate actual tokenization being the primary sort of source of truth of underlying securities. When that happens, then the only thing you have left really, I mean, there's a lot of minor pieces, but you have custody and TA, and that's largely regulatory. Once all of that stuff collapses—
TA being transfer agents?
The transfer agency, yeah, sorry. So once you have all of those pieces in place, then you're going to be able to have full end-to-end tokenization. Interestingly, the DTTC, which is the Depository Trust Clearing Corporation, there's the largest processor of financial transactions in the world. I don't remember the exact number. I want to say it's 4 trillion a day, or it's like some insane number.
Six quadrillion a year.
Yeah, so it's just an absolutely massive volume of transactions. They've already prototyped, and they say that within the next year they will be fully live with the 1,000 largest stocks in the US being fully transferable on DTCC in token form, like natively. But I think actually securitization is like a unique category, CLOs being one component of that, where tokenization of the underlying asset could happen very rapidly because there's two things. One, these are all private investments, and so you don't have the same regulatory burden that you would with traditional securities, and so there's just less regulatory burdens to doing it. And then two, the underlying infrastructure is very, very expensive. And so even today, there are people who are tokenizing securitizations in small size, but they're picking up 20 to maybe even 50 basis points of yield enhancement. Well, that's real money, right? So I think that will happen, and then our hope is that as that happens, we can then keep bringing more tokenized components into these funds to where they are 100% natively on chain.
Yeah.
And I would add to that by saying, to the point where we're on a journey here, and if I look at like what's native on chain today, there's quite a vibrant economy and user base of, I think I recently read a story of how until recently, previously, those who were holding a lot of Bitcoin and some crypto collateral, looking to buy a home, like certain DeFi lending markets were the only option for not selling your token, but also getting the cash liquidity in order to make that financing. And today, there's a very small part. If you look at the kind of user behavior and you translate that down to what percentage of a particular person's financial life is on chain today, that number is very, very small. I think it's larger it's average larger for the people in this room, but today it's very, very small. But that's quickly changing with the offerings and the products that traditional users want to access increasingly coming on chain, and that will just naturally create the user behaviors that we see in our traditional financial rails happening on these on-chain systems. In addition to that, I like to generally separate credit and payments as kind of two broad categories that to build in, and with the evolving payments landscape around stablecoins, you're also going to continue to see a lot more of that on-chain natively issued, obligations and sort of bonds and financial relationships because, again, you have just this migration of users on-chain that's growing day by day.
Maybe this segues into what Grove's plans are for the future. Where do you see Grove in a year?
Yeah. I mean, we are a protocol here to support the growth of this entire industry, and we seek the best-in-class partners to build liquidity, to build products together, to champion new experiences that we think wouldn't have been possible without sort of the coordination and the incentive alignment and the sort of just like real mission-oriented, actionable thinking that we hope to bring to the table. So, I'm excited to announce, I think, a suite of products that we'll have coming down the road that will, I think, up-level the offerings in this space alongside continuing to expand our partnerships with Janus and others to continue to bring more and more of the institutional landscape and the user base on-chain through our products and protocol.
Awesome. Well, Nick alluded to the DTCC. They were founded in 1973 as the DTC after the paperwork crisis of the 1960s, where the NYSE only traded 4 days a week because there was so much freaking paperwork to process. They had to take an extra day to process it. Failed trades were super common. And so that necessitated a shift from what was called a certificated model, where every share of stock was represented by a paper certificate, to a custodied model, where everyone's shares are in like a central database, the DTC. I'm curious if you guys have thoughts on this in a blockchain context. Can blockchains bring a return to certificated models, sort of like self-sovereign holdings of securities, or do you think the custodied model will predominate going forward?
Maybe this is not the answer people want to hear, but I think that what is going to happen is that there are very, very, very large heavily ingrained financial institutions that have a component of trust, but at the most basic level, I think most investors, and certainly every single large institutional investor, does not want to wear the risk that they forgot their password and lost their holdings. It's as simple as that, right? And so there is some amount of centralization that allows you to reverse a trade that was fat-fingered, that allows you to, make sure you, as an organization, you still have access to your assets, even if, your CEO gets hit by a bus or whatever. So I think that you're going to have these traditional intermediaries move on chain, and that implies a custody model where more of the kind of negative aspects of custody are stripped away in terms of cost and efficiency. But that last piece of having a trusted intermediary that sits at the last point of failure as a large organization that you can rely on, maybe for individual investors broadly globally, that's not as important, but for the overwhelming majority of assets, which is with very large institutions, that they're not going to be willing to take that risk on, and they're going to want to use a trusted intermediary.
Any thoughts?
Yeah, I mean, I guess breaking it down and not viewing it as a monolith. One of the powerful aspects of the technologies that we're building is it's inherently unbundling and making various parts of the financial stack more modular. And I think certain parts will make sense to be following more of the certificate, do your own research, like this is your own end liability, and that caters to certain use cases and certain assets. But at the same time, we're seeing, because we're able to break apart the financial stack, you're able to apply that, you're able to apply the certificate model or the custodian model to different pieces of the puzzle. Mm-hmm. For example, at the risk layer, yes, to your point, institutions are going to still continue to be dominant in terms of being able to evaluate price risk and to be able to ensure that the markets are operating efficiently. Mm-hmm. Whereas, a lot of the platforms that we build are built on top of and provide that services on, which is a large part of the Steakhouse's business, is inherently immutable. And basically, in that case, we're able to separate a lot of the pieces of the current financial stack and apply the kind of certificate model where it makes sense, and apply the custodian model or more of the kind of institutional model where other parts of the stack make sense.
Cool. Baji, do we still have time? Oh, okay. We have 14 seconds left. Thank you, everyone. And thank you guys for joining us on this panel. And yeah, have a good day.
Thank you all.